Hello, everybody. I'm Natalie Brunell. Thank you so much for checking out my show, where I get to hear from the leading voices in Bitcoin, financial markets, political structures, philosophy, and more. Please make sure you're subscribed to the show. And if you're watching this on YouTube, like this video so more people see it and hit that notifications button so you don't miss out on any new content. This podcast does not provide financial advice. It is for educational and entertainment purposes only. So make sure you always do your own research before making any financial decisions and be aware of your risk tolerance. I'm able to produce this show thanks to my sponsors, and I'm very picky about who I choose to partner with. So I hope you'll take the time to listen to the ad reads throughout the show. I'm also able to produce this show thanks to the support of my listeners and viewers, value for value. So if you'd like to make a donation to help the show grow, you can find my Bitcoin and Lightning wallets in the description. All right, now to my main partner, Swan Bitcoin. Swan is where I do all of my Bitcoin purchases. In fact, I dollar cost average every single day, not every week, not bi-monthly, every single day. I love Swan Bitcoin because it is a true Bitcoin only company. Swan has a ton of free educational resources on their website, and they now have a mobile app, which I've been using to smash by some Bitcoin. And Swan Studios produces my new show, Hard Money, which covers the biggest news in Bitcoin and the global economy. It's like an orange-pilled version of CNBC, so make sure to check that out on YouTube for all the biggest headlines, because we are not afraid to question the mainstream narrative. All right, it's time for the show. Welcome back to another special Coin Stories Hard Money interview. Joining me today is the CEO of Swan Bitcoin, Cory Klippsten. Cory, thanks so much for joining me. This is long overdue.
Yeah, it is, and it's a new year, and I'm glad to be here.
I'm excited to go all the way back to the beginning and get your origin story and the backstory of Swan, and then talk about everything crazy that's happening with the market. So let's start at the beginning. You were born in San Francisco, but raised in Seattle. So tell us a little bit about your upbringing.
Yeah, so early years, actually born in Marin County. My parents did meet in Haight-Ashbury in the 70s in San Francisco, and most of the things that means are probably true about us as well. They decided to move up to Seattle in the mid-'80s, so we moved up in like '86, just before I turned 9, I guess. And then I was in Seattle from like 5th through 12th grade.
And what did your parents do in terms of like socioeconomics? Were you guys middle class, or did you think about money when you were young?
Yeah, it was an interesting one. I mean, they grew up kind of like on and off of a commune in Northern Cali. So that first 8 years was kind of split, like 4 years in Marin. I think we moved to Lake County, which is, you have to go through Napa and Sonoma, and then you get to Lake. So we were up there 4 years total in 2 separate times that we lived there. And then I think I was in Marin 3 times. So it was Marin, Lake, Marin, and then up to Seattle. And so they were basically, kind of putting all of their money into this communal lifestyle and, working, which a lot of people didn't, but my dad in particular did. And so a lot of the kids that I grew up with had no relationship with money and no view into like what work looked like at all. But my dad was pretty industrious, and like he wrote and edited all of the publications and edited the books, and kind of was in control of kind of the publishing. And then he also owned a grocery store up in Northern California, which ended up also being kind of like the community bank, because he was the only one with any money, so people would borrow from him. So I was like a little bit more aware of commerce. And then in Marin, he actually had, with some partners, one of the first health food chains in the country. So TNT, I think they had 4 units at one point in San Francisco and Marin when I was little.
Wow. Well, so what is living in a commune like? I mean, I imagine it to be almost a little isolated, and why would your family want to live like that?
It's so funny. I spent so many years, especially going and, being in New York and Chicago for most of my adult life before coming back to LA, kind of like hiding that and not wanting to talk about it. And then you get back to LA and it's like, if your parents didn't live on a commune at some point, you're the weird one, because especially people that are, in their 40s and 50s and 30s now, if their parents grew up in California at some point in the 70s, like there's a very good chance they were, dallied in hippieism a little bit.
That's so foreign to me. That's so interesting.
Yeah, it is. I mean, and I went to Mizzou, so I was obfuscating that as much as possible going to Missouri for undergrad. So.
Well, did you know that you wanted to study journalism? Because I would imagine that someone that wants to study that, like me, I was watching news when I was a little girl and wondering, can I do the job of a Barbara Walters? So what made you want to go down that path?
It was both. Yeah, it's so funny. I was actually just, I was digging through some old boxes in the garage looking for some old Disney comic books for my older daughter. And I came across a folder that had a bunch of stuff from my childhood. And when I was 8, I was answering the question, what do you want to be when you grow up? And my first choice with a big number 1 by it was journalist.
Wow.
Which is wild. So I guess I had it, I had the bug really early. It was obvious to me when I got to high school that I wanted to be on the paper. I was the first freshman in like a decade that was writing for the paper. It was one of these like really intense high school newspapers.
Wow.
At Shorewood High School in Seattle. We got like first in state my junior and senior year. And I only applied to journalism schools for college. I thought that's what I was going to do. I was kind of obsessed with Christiane Amanpour and kind of like war reporting on one side. And then I loved Sports Center and sports journalism on the other side. And I figured I'd do a bit of both. That was kind of the plan. And
that's really interesting. I mean, I haven't followed Christiane Amanpour in a while, but actually when I was younger, I remember one of her quotes that I thought about when I ended up going down the Bitcoin path, because she said something to the effect, I'm going to butcher it, but she was doing some war reporting, and she said, typically in journalism you cover both sides, but if you give equal voice to both sides, you sometimes are propping up essentially evil, because there are so many nuances to different stories. And so just saying here's the left side and here's the right side, there's a lot of gray in the middle. And I thought about that with Bitcoin, because sometimes when I would try to cover it as a news reporter, it's like, we'll find the people that are against it, but those voices are literally spewing misinformation and myths and things that are completely false, but yet I had to give them a platform to state those myths. And it was like, well, what is journalism in a sense? So
yeah, I mean, obviously I struggle with that a bit, and I generally lean on, well, the person with the misinformation is the foil that you can use to ask the questions and make the points that can be refuted or that can be answered. So that's usually the way to use the opposition in Bitcoin anyway.
Did you become a TV journalist for a while? You worked at the Mizzou station, right?
Yeah, it was terrible. Luckily, I got it out of my system. Actually, the reason that I ended up going to Mizzou over some of the other schools like Stanford and UW and Northwestern and ASU, which were kind of the other big western half of the country journalism programs, was they owned the local NBC station. And so if you were good enough, you could actually get on while you were still in undergrad. You didn't have to wait until you graduated and try to get some job in rural West Virginia.
Like I did.
Right.
So I went on.
So I got on air. I think by first or second semester junior year, I was on air doing some news and some sports, and I did like Today Show morning news cut-ins on the 25 and the 55 in the studio, and so I got to try it out, and I was not good at it, and I hated it.
Really?
Both. I'm a bit of a perfectionist, so also probably hated it because I wasn't good at it. And it's interesting too, though, because at the same time the internet was exploding. I was online starting in '93. I had some really ambitious professors when I got to Mizzou in '95 that were teaching classes online even back then. Using Pine and Moose and things like that. And so online journalism was just starting to kind of kick off. I got really close to a guy, one of the professors, Mike McKean, who was doing all the new media stuff at Mizzou, and basically structured with him what a new media journalism sequence would kind of look like. They didn't allow us to major in it. Actually, the class after me, you could major in it, but my class couldn't, so I got a broadcast degree. But I was doing a lot, and so I was working on the TV station website. That's what got me in with Microsoft, because they were doing the local TV versions of all the MSNBC.com, all the station websites. Were going and doing local news on that new joint venture. Back before MSNBC was partisan, it was just like a normal objective attempt anyway. That was kind of the transition for me. I just online kind of took over my interest in broadcast, and I got more interested in internet.
News is an interesting analogy for what's happening with Bitcoin adoption, because it was sort of forced on the news industry too with the online media, right? They had to transform. Newspapers were bye-bye, you got to adopt the computer systems. And same thing's going to happen with the traditional system. So there's a lot of parallels there. Okay, so you went to University of Chicago for your MBA in Chicago, right? And then you spent like 15 years there. So what was your experience doing that? Why get your MBA?
Yeah, so I went to New York first. So I went to work for Microsoft after interning for them, and worked for Microsoft out in New York for a while. And then I worked for, at some point I didn't even really know about the business world at all. That was one of the things of just sort of growing up on the left coast with parents that were on and off of a commune. And then, even the public schools in Seattle, it's all arts and sciences. So there's just there's no rich uncles that do business really. Like you just don't get exposed to it. So I wasn't aware of MBA programs, or I don't think I heard the term investment banking until summer of 2000, after I was already into my professional career and had finished undergrad and the whole thing. And I was like, wait, you can just go to school and learn how to make money? That's interesting. and that starts to become more relevant when you're living in New York and you realize, it's very stark differences between people that have figured out how to make money and people that have money and people that don't. And so I, very nakedly ambitious, wanted to stack higher than I was coming out and working in online. And so I decided to go to business school at some point. My plan was to work for Morgan Stanley for, maybe 3 years or something like that, and then go to business school. But I think I started at the beginning of January of maybe late December. Anyway, I was there less than a year when 9/11 happened, and I worked in Tower 2. So I was in the old legacy Dean Witter offices in Tower 2. And so when the building fell down, they decided to just kind of merge my department finally completely with the Morgan Stanley side.
Were you in the building when it happened?
I was on the train on the way down. Yeah, so I voted in the mayoral primary that morning, and there was a long line at the polling place, and I got on the subway up on the Upper East Side, and evidently so let's see, I was Tower 1 got hit while I was on the train, and then people got on at 14th Street because it was an express train, and everybody thought it was just a Cessna or a commuter plane or something like that. And then I was like, well, that doesn't sound like that big a deal. That's weird. I'll just keep on going down. And then Fulton was closed. I had to get out at Wall Street. And then I looked up and I was all confused because my tower was on fire and had clearly just been hit. And they were like, oh yeah, that one just got hit too. And so I was down there. It seemed like minutes, but evidently I was down there about 45 minutes. And then I had caught a train back up to Midtown and went to the BBDO offices where my then girlfriend worked, and saw some of our friends. And my tower fell while I was on the train going back up. And then as soon as I walked into an office and saw TV, I saw Tower 1 fall live, which was crazy.
I mean, I remember watching that. That was one of the things that for me as someone who aspired to be a newscaster, I remember those anchors sitting there and everyone, it was like the mood of America was just viscerally changed. And everyone has a story. I think about now, there were people that were born after it, right? That don't understand what it was like to live through that. But Greg Foss's roommate died in 9/11, I believe, a former roommate that he had. My ex was supposed to be on the plane that ended up crashing. It was a United Flight 50, so it's just crazy. I mean, now it's so long ago.
Yeah, there's people that can walk into a bar and get a drink that were born after that.
That's crazy. It's just so crazy.
Yeah, it's wild.
Did it have an impact on just how you viewed what you wanted to do at all? I mean, especially for those living there or working in those buildings, it was like a life-changing moment. Yeah,
I mean, for me, it just made me want to leave New York and not work. I didn't have any motivation whatsoever to work anymore. I just didn't want to really do anything for a long time. So I decided to go to business school sooner rather than later. So I went the next fall, and I basically just kind of traveled. I think I took all the United Way and all the Red Cross and all the severance from Morgan Stanley and just hung out for 8 or 9 months and coached basketball at the 92nd Street Y and traveled through Europe and just kind of got ready for business school. And then I went to Chicago. I had been planning to go to Columbia or NYU and stay in the city, but that's why I ended up deciding to get out of New York for a while.
Wow. Okay, so tell us about your path from that point on, because Chicago is a great business city, and a lot of people go and work in the commodities trading or stock floor. So what was that experience like, and how did it lead you to eventually, you're advising, you're working with startups and big tech companies?
Yeah. So I basically, I was just so young when I started business school. I was 24, which, I was probably one of the 5 youngest kids in the class, which was probably a bit of a mistake. Should have probably waited and had some more real life experience. But for me, it was great because I really threw myself into the studies and the networking and the having fun and everything. And so I still wanted to go back to New York. That was my plan. I only wanted to go there for school. So I interned back in New York between the 2 years. And then I went to McKinsey and was working in management consulting out of the New York office. But I had so much fun in Chicago and had such a good network there. And it was just like, it's such a great place to be, as you know, that I found myself just going back to Chicago often. Even when I was living in New York, You're
always going back to the other city.
I was having so much fun. I would even go back sometimes. I would fly out on like a Wednesday afternoon just to go out with my friends on Wednesday night in Chicago, and then fly back and go straight to the office on Thursday morning. So it was pretty funny. So yeah, little by little, I just kind of realized I wanted to be back in Chicago for a number of years. I had raised some money for a nightclub that was like an LA nightclub that was bringing their brand out to Chicago, and that ended up being a much larger endeavor. Ended up being like a $5 million restaurant nightclub with one of the top Latin chefs in the world on the river in Chicago, the whole thing.
Wow.
So I could basically like step into that. So I quit management consulting, started doing private equity consulting on my own out of Chicago, while also being the marketing guy to open up this restaurant nightclub. So I moved back to Chicago in 2006, did that for a couple of years, and then 3 more years of management consulting. And it was really the global financial crisis that made me reevaluate what I was doing for my career. And
did you see any of that coming? And how were you investing during that time?
Yeah, so I did see it coming. My roommate those years in New York was on the distressed bank loan sales desk at Goldman Sachs. So I had I mean, 200 of the 500 graduates from Chicago every year go into banking and private equity. So like you have a lot of friends that see a lot. I was listening to like Bill Gross PIMCO podcasts every day, even in early 2007. So, I mean, from like January, February 2007, I was tracking the subprime crisis like every day.
Wow.
Talking to my roommate Cameron at Goldman, who's still on that same desk. Well, he runs that desk and another desk now. And he was telling me in, 2007 and 2008, like this train is going to go off the tracks. We don't know what's going to make it go off the tracks, but like this is unsustainable, and you can't have CLO squareds and lever up like this and have it continue.
So were you into hard money back then? Were you like stocking up on gold?
I didn't get there. So it wasn't even the econ classes that I took at Chicago, which is obviously kind of a hotbed of Austrian economics, really.
Really?
Yeah.
Wow, I didn't know that.
Yeah, I mean the Chicago School of Economics is all about kind of sound money and stuff like that. I mean, there's obviously been Keynesians there too, but it's pretty famous for that. I never got past the monetarists. I read a lot of Friedman, but I didn't get to the Austrians in like 2004.
Okay.
So I was kind of like vaguely aware that something was broken, but it wasn't top of mind, and I didn't have a bunch of investing activity. I was more just focused on like advancing my career and stuff. So. From like a 30,000 foot level, I think the reason that I got out of online and went to business school and consulting to, Fortune 100s and things like that was because the .com boom and bust was just so violent. And it probably had a larger impact on the Bay Area economy, but I think the fall was faster in New York, because way more of the financial only puffery of the .com era was in New York. So a lot more, like the BS quotient was higher in New York. So there were just like way more parties and way more free stuff and way more unsustainable attempts at growing companies in New York in that sort of 99, 2000 era, which I kind of lived through being a young person running around the city. And so I kind of ran over trying to see like, is there this more solid economy that's not gonna get rug pulled? And then what happened in 2008 was you saw that the solid real world economy was complete BS too. Yeah. And how I navigated that was, well, I just want to work on something that's not dependent on all these other people. I want to work on something where, you know, the outputs, the outcome is much more directly tied to my inputs, my network, my intelligence, my effort, my decisions. And that looked to me like you should do startups. You should start your own thing, and you should basically be involved in early stage companies where, you know, a really great connection that you make or a great idea that you have or whatever can just kind of have a step change effect on the equity value. So that was the thesis that I was developing while still working in consulting in like 2009, 2010, was that I wanted to get into startups, and I couldn't get there straight from consulting. So for the first time ever, instead of just like accidentally choosing the next step, I very deliberately sought out a job at Google specifically so that I could leverage that brand to network into Silicon Valley.
It's so interesting that a couple of those companies, you need to have them essentially today on your resume, or you're going to miss out on a ton of opportunities in tech, period.
Yeah. But, you know, when obviously like now running Swan, people are always, you know, young kids are always hitting me up on you know, Twitter or whatever and conferences and saying like, what should I be doing with my career? And I'm like, well, I didn't actually make a conscious career choice with any logic until I was 34. Like everything was accidental until I was 34. You know, just like collecting tourist stops with no intent and never really doing like a great job at any of them. Not really trying all that hard until my last stop in consulting, but basically because I wanted to be able to get into Google. And yeah, at that point, then I was all in. I saw the path. I knew I wanted to get into startups, and I just networked like crazy from, you know, having a google.com address and, you know, being Google on LinkedIn. That's when I started throwing Tech Salon Monthly every month in Chicago, which now is, you know, basically Swan Salon Monthly, which we do, has been going on in some shape since 2011 for me.
Yeah.
Which is crazy.
And you have a lot of experience fundraising, because that's really important on the startup side too. I mean, you've raised what, over $200 million for different companies?
Yeah, quite a lot more than that, but yeah.
Wow. I mean, that, especially in an environment like this, do you have just any insight? Because it seems like it was probably easier in an easy money environment where they're printing money. And so a lot of people, it doesn't even matter what the fundamentals of a company are, you can raise money pretty easily. And VCs take advantage of that, whereas today it's sort of maybe going more in the direction of how an economy should actually function.
Well, we've retrenched a little bit, but these levels are still like, the amount of easy money out there right now is still so much more than there was like 4 years ago or 5 years ago. So we may have retrenched a little bit, but our levels are still so much higher. Like it's really still, you know, the multiples are still very high, and there's still tons of cash on the sideline.
Wow.
Even though it's tightened a bit in the last year, it's still much easier to raise money for a good startup with a good team today than it was in, you know, 2013.
Well, I want to hear more about that. So how did you create Swan? Because it was first giving Bitcoin, right? How did it turn into Swan?
Yeah, so...
You obviously knew about Bitcoin.
Okay, so the short version is I basically just started working as like a strategy and fundraising advisor and angel investor. And that's what I did since leaving Google in 2013 all the way through. I had some swings and misses on Bitcoin. So it's in my email in 2012. I don't remember actually talking to anybody about it until a tech conference in January of 2014. And somebody actually made me download a blockchain.com wallet and gave me some Bitcoin, which I then proceeded not to research, didn't read the white paper, lost the key, don't have the Bitcoin. And then second swing and a miss was holidays of 2015, when a buddy of mine who had a bunch of angel investments asked me to help him sell off like half of a Series LLC. And two of the companies in there were Balaji's 21.co, which later became Earn.com and sold to Coinbase, and Ripple. So he had a piece of those two. So it was back in the stage when, you know, Balaji was doing like toaster mining or something like that, mining with your appliances. So like that didn't take. So I even put together 2 slides each on each of those alongside 6 other companies, and we sold that off. And that didn't make me think that Bitcoin was anything, because they're just so tangential and not sort of like down the middle. So it wasn't until the price run up in spring of 2017 and all of the noise of the ICO run up and all that it finally caught my attention. And it was a VC friend of mine that I used to do deals with, you know, was just like, you need to take a look at this thing. And I read Digital Gold and I started reading, and I got super confused by the bad signals coming out of Andreessen Horowitz and Union Square Ventures and all of these sources that I usually turn to be right about things. And they push you toward, friction tokens and ICOs and crypto and the economy, whatever, the themes of the day in the altcoin world. So it was a solid, so I got into May, started buying some Bitcoin then. And then I started working in crypto as a consultant in November and didn't understand the huge difference between Bitcoin and altcoins until March, April of 18.
Wow. What helped you get there?
So I've told the story a few times, including on Jimmy Song's podcast, which was fun to tell him my side of, because he remembers it as well. But the first prick in the altcoin bubble in my head was toward the end of the year in 2017, actually, and that's what got me starting to research. But I was at BlockCon in Santa Monica, which is like a blockchain conference. And I was just taking a break from the conference, and this was actually right across the street from the Pacific Bitcoin venue, our conference that we just threw. So at the Aviation Museum, and so out on the lawn out there, there's like a group of people sitting out there, and it's like 3 or 4 people, and there's this one guy in a cowboy hat, Jimmy Song, and he's just looking around at people like he just hates them and wants them to die and melt into the earth. And I was like, well, that seems interesting. Why is there one guy that just seems super salty and hates all these people around him? I got to find out more about that.
That's hilarious.
So I sat down in the circle and started asking about him. And, he told me he had a YouTube channel. And, he told me that I might want to consider the possibility that all the altcoins were actually worthless and that I should look a little more deeply into Bitcoin.
Well, what did you think at the time? Were you at the time investing in like OpenSea and all these different, were you in Ethereum and all of these, and then you realized, wait, maybe I should take it?
No, at that point I still only had Bitcoin. I think I only really started buying alts in like November, December. So just like right after that.
Wow.
And then, you mentioned OpenSea. So I was starting to cut checks into like equity of blockchain related startups as well in like December, January. So I think you mentioned OpenSea. I think I did that in January, February of 18 in their angel round. And anyway, so Jimmy's show, and then Tone obviously was co-hosting that sometimes, and then he had his own show, and then I found Andreas, and I just devoured all Andreas videos over the next 6-9 months, something like that. And basically by June I was trying to start a Bitcoin ecosystem fund, and that was with like Steve Lee from Block, Dan Held, and a bunch of other Bitcoiners that were kind of interested in doing something. I just didn't know what I was doing, and I was trying to do it under the wrong brand. I was trying to do it under a crypto fund and not understanding, like the crypto people didn't want to say, if you're doing something in Bitcoin, like almost by definition, you're against us.
Yeah.
Because our whole thing is orange washing, affinity scamming on Bitcoin and trying to like say that we have something better or different in some way that's going to work, which obviously if you know me by now, I don't think that's true. That was just kind of like the wrong way to go about it. So anyway, I, as always, go to Turkey. My wife is from Istanbul, and so I go to Turkey every summer. And I think we were there the whole month of August that year. And I came back and I was like, all right, I'm going to work in Bitcoin full time and figure out something to do. Don't know what it's going to be. And so I was kind of rooting around, and I had always done, interestingly, like much more sort of B2B, hand-to-hand combat, enterprise salesy type things. Not always. I had some consumer background. I mean, I was involved in 50 startups over those 7 years, so I had some consumer stuff. But for me personally, I thought that I should be, making deals and, thinking about it more in like asset management world. And so the first thing I was working on was a closed-end fund with a former PM from kind of traditional finance that was going to be like 80% Bitcoin and 20% levered treasuries, and we thought we could get that approved pretty quickly. And when we were kind of at the finish line, we had all the legal work done. It was gonna get approved, and he ended up selling it to Galaxy actually after the fact. But I realized if I was going to be part of this on a go-forward basis, I was going to have to sell the thing to asset managers and try to get them to put that 1% in. And that conversation is just so lame, because you're just trying to make this case for like, you got to get off zero, and they're spending other people's money and you're not changing their life at all. There's just no reward in it versus how fun it is to help someone understand what Bitcoin is, and just like how that just lights up so many pleasure centers in your brain when you orange pill someone. Like, it's just super fun. And so the combination of not wanting to be on the road and didn't want to go hand-to-hand combat, selling up and down Wall Street or, Dallas or whatever, I just wanted to do it from home with my 2 young kids. And so I was thinking, okay, this has to probably be something that's an internet product selling to consumers. And then recognizing that what I really enjoyed was the education and sort of the convincing and kind of the figuring out what that pitch is that hooks somebody. How do you get people into Bitcoin? So I wanted to do something at the intersection of education and a consumer on-ramp. And it was not evident at all back then that there was space to just come in and just do a Bitcoin on-ramp and compete with the exchanges. Everyone thought that these things, had it on lock. They were like, why would you need that? Coinbase exists.
Right.
And so for me, the gifting idea, which became Give Bitcoin, was I just thought of it as a great orange pilling tool. And I was still working with other startups, and I was like, I can just use a dev shop and just grab a few $100,000 and maybe get this thing to a certain scale and then sell it to somebody. So it was very limited ambitions back in 2019 when I had the idea in April, started the company in June. We launched in November, and it, for people that don't know, Give Bitcoin, which is now just swan.com/gifts, it just lives inside of Swan now. It's you give somebody a little bit of Bitcoin, and then back then it was locked up for a year. So it was escrowed for a year, and you got a chapter of Bitcoin education every month, basically on the 1 month anniversary of receiving the gift. And at the end, once you've gotten the 12 chapters of the Give Bitcoin education, you would then own your Bitcoin.
Such a great idea.
It was a great idea, yeah, and it took off, and it was great, and got a ton of great people involved, and that was when we kind of got the initial set of advisors. That's when I got Jan Pritzker on board, Stefan Livera, like a lot of these folks got involved back in 2019, including Brady and Brecky and Brandon, 3 Burrs. So Brandon Quittem, Brady Swenson, and Brecky all kind of got involved in the fall of 2019. And so what was interesting is, so we launched, I think it was like a friendly launch at the end of October, and then we were kind of in market all in November. And it was lower fees than the Coinbase app, and it had recurring purchases because it had recurring gifts. And so even though it was in a product that was called Give Bitcoin, and even though it was locked up for a year, right out of the gate, like 90% of the volume was people giving gifts to themselves because it was a better DCA platform, product, whatever,
that makes sense,
than anything else in the USA.
And it is a gift for yourself, for your future.
But so the opportunity was, the demand was clearly there for like a stacking product that was directly buying for yourself. And so in December, I started spending a lot more time with Jan in like November, December, and he was seeing the numbers, and he was kind of sitting in the Slack and decided to come on board, and we decided to go after the direct on-ramp. So we announced that. I think I came up with the name Swan the first week of January of 2020. And because we had already built the back end, and it was all kind of the same pipes, we just needed to make it look better and be more focused. And that's how we were able to launch in March of 2020, just 2.5 months later.
Right into that bear market,
it was
the
great.
Pandemic crash,
yeah, we launched
right?
March 30th. And I think, Demolition Day was March 12th, right? Thursday, I think.
Okay, I want to come back around to building a company in this type of environment, and you just hosted this massive conference, also in a bear market. Yeah. But first, I have 2 really important questions. Number one, just based on your whole, you went through this really interesting career that has lots of different facets and components to it, and your backstory on the commune. Like, what was it about Bitcoin that really made you so passionate about it and see it as a fix for so many problems? Like, why do you care so much about Bitcoin?
I think it is kind of the enormity of the set of problems that it provides the solution in whole or in part. So I just think it really, it's really it has so much meaning. It's so important. Like, how can it not be motivating once you understand what it is? You know, Peter Thiel, in his book From Zero to One, you can quibble with him on his politics and a million other things, but he did have a great 2x2 in there where he talked about, you know, how do people or how do cultures view the future? And, you know, it was basically like definite versus indefinite and optimist versus pessimist. And basically there was no culture left on the planet that has a determinate optimist view of the future. The only people that have a determinate optimist view of the future today really are Bitcoiners. There are people, like America kind of has like a indefinite optimist that's leaning even a little bit more toward pessimist. It was definitely an optimist when he wrote the book. You know, the CCP has kind of like a determinate pessimist view on the world, and that's how they sort of, you know, play realpolitik and stuff like that. But Bitcoin, because you have something that you're actually working for that really can change how the world functions and make it better in so many ways. I don't know, it's incredibly motivating and purposeful to work toward that and to try to pull as much of what we think is going to happen with, you know, greater economic cooperation and less friction between monetary systems and the unlocking of greater human freedom and productivity and all of these things that we see. Like, these are, I don't want to be nebulous about it in case somebody happens to be tuning into your show or seeing me for the first time. Like, there are very concrete things that we expect to happen because we 8 billion humans have better money that's state-free and that's fair. So we can, you know, talk about as many of those as you want to. But it is very concrete what we're working for. And Bitcoin will create other issues because it's replacing so many things, and there will be new opportunities created. But the general thrust of it is that it will make things dramatically better for us humans.
Yeah, well, we always say Bitcoin fixes this, and you touched on some of those ideas of more access to opportunity and more inclusion and maybe a more fair system in a way that is based on competition. But why, based on your background and who you are as a person, why is that important to you to see a world like that?
I mean, I've always been like a justice seeker. I think that was like a very strong thread through my journalism career. And one of the things that attracted to me about journalism was, you know, adhering to objectivity and, you know, standards. And I've always wanted to know like what's true, what's not true, and what's a maybe. And I've always gravitated toward people that had a very firm understanding of what they knew and what they didn't. And I've always been very, you know, sort of repulsed by people that thought they knew something that wasn't true and weren't aware of what the demarcation is between what they definitely know and what they think they know.
Well, you're calling them out now. A lot of those people, right? That must be part of that, right? We'll come back to that.
Yeah.
But let me ask you then, so for you, this idea of Bitcoin versus crypto, what made you get it in a way that's so simple that anyone watching this with no business background, maybe no Bitcoin knowledge at all, why Bitcoin, not crypto?
You can summarize it by saying that only Bitcoin is deserving of a monetary premium. And so thus far, we humans have only found one thing that works, that needs a blockchain, that needs a time chain, and it's money. And Bitcoin dominates all of the altcoins across a whole host of potential criteria as a better money than they are. And this comes from being first, it comes from being immutable, it comes from having a culture of forward compatibility, which is like using soft forks instead of hard forks. Like, there are a whole host of reasons why Bitcoin is better and more trustworthy than any altcoin can be. It's possible that in the earliest years, maybe 2010, maybe 2011, that another project could have done it and could have superseded Bitcoin. Conditional upon that not happening, I would say by 2012 or 2013, the race was over, and that it was impossible for a new cryptocurrency to beat Bitcoin at the game of being money.
So when someone is watching this and they still don't understand the nuances and the difference, what do you say to someone who asks, what are these other currencies then?
Mm-hmm. Yeah.
They're based on cryptography, right? You need a digital signature. They have a blockchain. So what makes it different?
Yeah, so they're just not actually decentralized. So there's a common acronym. They say DINO, Decentralized In Name Only. And that's what you see with things like Ethereum that hard fork regularly, based on management decisions, or, completely change their consensus algorithm. So now you've got like a completely new currency and the old one is gone. And, so any sort of longevity, or as they say, the Lindy effect of how, you can trust something more the longer it's not been changed. You kind of start from zero again when you change everything. And you do that every time you hard fork, which, all of these companies, all of these companies really do that
Right.
with these altcoin projects. And then this idea that there's, something going on in like, Web3 or blockchain, like that, it's easy enough just to look at, none of them need a token. So the price for running a decentralized application historically, and all we can really see in present, is running a node on that network. You don't actually need something else. If you did need to pay for something, you can just use dollars or Bitcoin. You don't need your own friction token, your own Chuck E. Cheese token that only works in this ecosystem. And if you did require that for some reason, there's absolutely no reason for someone that needs to use that to hold it outside of that system, because there are better stores of value.
Right.
So even if you do need to use this, S-coin, ship coin, as Matt Crowder says, if you need to use a ship coin inside of an ecosystem, there's still no reason to hold it.
As money, right?
As money, exactly.
No, that makes sense. I feel like because many of us had that experience where you come in and of course you think you're too late to Bitcoin and these others are a lot more affordable, and you think, well, what if I put a small amount into this and it takes off? And I'll obviously take it out, right? Hopefully, right? You could time it. This is the whole ethos of the system. You don't time the market, you put time in the market with Bitcoin. But I can understand why it's so attractive, because it takes so long to understand the differences. And financial decisions, everyone's telling you, diversify. Have real estate, have some stocks, have this, the 60-40 portfolio. And Bitcoin kind of blows through and changes all of that, but it takes so much time to learn. So is that part of why your mission as a company is not just, hey, here you can buy Bitcoin with us and DCA, but it's this education component, which hopefully you have that you see the people coming through and they become customers, but at the end of the day, your goal is to educate 10 million Bitcoiners or something? Yeah,
so to be very clear on the initial mission of the company, which we published in 2020, we wanted to recruit 10 million new Bitcoiners. So that doesn't mean necessarily that they have to be Swan users. That was never the point. The point was we needed to have...
Educate them.
Yeah, exactly. And how we defined a Bitcoiner for that purpose is like having a decent chunk of your value, some meaningful amount stored in Bitcoin, and then to know enough, understand enough to actually care about it, to want to fight for it, to want to evangelize, to want to show up at a town hall and, argue with some rep that was contra Bitcoin, like Brad Sherman or something like that. Aren't we sitting right in his congressional district?
Yes, we are.
What's up, Brad? How you doing?
Okay, so then how does a company like Swan actually make money? I mean, just totally frankly, because your fees, you market low fees, and you tell people to take your Bitcoin off the exchanges, so you're not even managing a lot of people's Bitcoin. So how does a company make money, and especially in a bear market?
Yeah, well, the good thing about being such a strong voice for Bitcoiners is that you end up with a lot of customers that like to buy Bitcoin on sale. So when the price crashes, we usually do really, really well. So that's actually been fine for us from sort of like a volume and revenue perspective. We're turning into a pretty diversified Bitcoin financial services company. So there is the retail side, obviously, with swan.com and the Swan app, which you should definitely download and use on iOS and Android. And then we also have sort of the other side of the house that internally we're calling it Swan Global Wealth, but it's basically Swan Private Client Services, Swan Advisor. So it's private. Swan Private is for global high net worth individuals around the world and companies. And then Swan Advisor is for RAs and FAs to help them get their clients into Bitcoin. And that's a platform that's available for wealth managers throughout the US. And then we have other things that we're now using our distribution and our sales team, so like just, you know, the voice that we have with our events and our shows, and just the network of being able to say, hey, this is the thing. All of you other Bitcoin podcasts and macro podcasts, this is the thing. We vouch for it. You can have them as guests. So it's like a really good platform to launch a product. So now we have the Bitcoin Opportunity Fund, which we're obviously heavily involved in with James Lavish and Greg Foss and that crew. And then we have Swan Home Equity, which we're doing in partnership with a couple of guys with deep experience in that world, in mortgage lending and financing. And there will be more. You know, there's another fund we're in diligence with right now that I think we'll probably bring to the platform. But yeah, I think that's it. And then, you know, there are other services that we'll bring to market over time. You know, we did acquire Spectre. So Spectre Wallet, Spectre Solutions, earlier last year, I guess. So we'll be doing a lot more around multi-sig and around sort of institutional custody and things like that over time as well. We've got the Bitcoin IRA, Swan IRA. We've got the Bitcoin Benefit Plan, where a lot of companies give all of their employees Bitcoin every month. I know we enjoy that gift every month as a fringe benefit. So yeah, it's just kind of, you stack up a lot of different products and services that are directly selling Bitcoin, but also Bitcoin related. And I think you can build a pretty large company on that. I mean, I think we just onboarded employee number 94 this week.
Wow.
Growing fast, had no problem with our fundraising recently, so.
I mean, it's been really, frankly, fascinating and inspiring to see it grow in the way that it has, especially given the macro landscape we're in. And I didn't hear about Swan Bitcoin until I was really immersed in the space. My entry point was 2017. I got a Coinbase account. And so when I saw all of these people that I admired so much, the Lynn Aldens and all these people that everyone follows and the big voices, they're advising this company, they're investing and they're DCAing in this company. It really piques your interest and you say, well, there's got to be something to this. And so in a way, are you even competing with the big exchanges, with the FTXs and the Coinbases, or are you trying to do this in a very different way that's more grassroots, that's really focused on the retail investor as opposed to the trader? You've always been about saving as opposed to trading and getting into all the alt tokens, which have made these companies very, very profitable, right? It was a deliberate choice to be Bitcoin only at a financial loss.
I don't think that it is, because I think that it's actually long-term greedy to be Bitcoin only.
Agree. But short-term financial loss, yeah.
I mean, it's not even a loss, because like we wouldn't have our fan base, we wouldn't have this word of mouth engine, we wouldn't have the Swan Force, we wouldn't have, you know, all of these, you know, Bitcoin super fans pointing people towards Swan if we were just another crypto exchange. I don't think there was a room for another crypto exchange. I think there was room for a Bitcoin-only financial services company that understood how to get people onboarded into Bitcoin and to do that at scale. You know, that's one thing that Naval actually does get right, is that you scale with code and media in this day and age, and that's what we decided to do, was really use media as the way to acquire customers and to build the brand by putting out essentially educational content through media. So it's a good formula.
Well, with your desire to seek justice, what prompted you to go down the rabbit hole of learning about all these other exchanges that were offering yield and start warning customers and offering, you know, incentives to come over to Swan and say, hey, get your stuff off of these exchanges? You know, what was that process like? Because some people, you know, started to call you toxic and saying, hey, you know, we need to get rid of some of the things that you're saying in this space because it's not good for the whole ecosystem. But then a lot of them are coming back to you, right? Saying you were right, or thank you for saving my money. So tell us about that experience. Yeah.
So this is maybe apocryphal at this point, but I think it was something, I've always credited Nick Szabo with this, but it was basically that more or less like save your bullets or save your arrows for influential ignorance, that you can't go after and like combat ignorance everywhere you see it. But if it's influential, especially around something that you care about or that you work on, that's when you kind of have a duty or a responsibility to say something about it. So I wasn't out there, you know, going deep on every altcoin. It's like, oh, I'm going to do a Polkadot teardown because, you know, the price is up and these VCs are pumping it or whatever. It's just kind of like, that's just more of that crypto pump and dump altcoin activity. But only when it came and started to affect Bitcoin directly, and I started to see it in my feed and started to see Bitcoiners talk about something, would it then pique my interest, and would I want to go a click deeper and kind of understand what was going on? And so the first of those last year was Luna, right? And so they made this announcement about wanting to buy Bitcoin, and, you know, the guy started doing the rounds, and, you know, as usual, Pomp puts a grifter on his podcast, and, you know, like
Laura Shin too. I mean, Laura Shin was also interviewing a lot of these
grifter
people.
On her. I mean, she's had 4 grifters on in the last 2 weeks. Like that's her thing, is interviewing scammers. So.
A lot of people interviewed, yeah, the big people, yeah.
I like her style, by the way, as an interviewer, but my Lord, does she give her platform is basically free advertising for these people. Anyway, so that, you know, Bitcoin treasury thing made me want to go a click deeper and see, like, what is Luna actually doing? And it was just plain as day when you understood the mechanism between UST, Anchor, and Luna, that it was an actual Ponzi scheme, and you could actually describe it very easily, you know, and say, like, hey, they're offering this crazy high interest rate if you put UST into Anchor. Why would they be doing that? It's because it pumps the Luna price, because it makes it look like there's a vibrant ecosystem. So these people must be offering the free money to people for this Anchor reserve because they're dumping Luna out the back door. And that was just super obvious that that's exactly what Kwon was doing. It's exactly what Jump Capital was doing, and like anybody in that ecosystem was doing that. If they weren't on the wrong side and trying to clip the yield. And so, you know, I think I took like 45 minutes of research to figure that out, and I started tweeting about it in late March and saying this thing's going to go to zero, and started to do media about that. And then when it did, it just was like, it exploded, right? So I think it collapsed on, I think, May 9th, I want to say. And then right after that, it just rolled straight into Celsius because Mashinsky or one of those guys, kind of the word got out that they had pulled over $500 million of user funds out of Anchor over the weekend, you know, right before the collapse. I think it depegged on the 9th and then collapsed completely on the 12th or something like that. And basically, anyway, in those 2 or 3 days, Celsius had pulled all this money out of this Ponzi scheme. And it's like, wait, you guys have been using the words of savings and, you know, just, you know, essentially marketing against banks this whole time. And, you know, I was aware that there were lots of people that were using Celsius as a bank, you know, as their where they kept their money, you know, and they're doing crazy stuff like putting your funds in an actual Ponzi scheme.
Do you think that the people leading these companies had sort of evil intentions to commit fraud? Because I even remember talking to Alex Mashinsky, and he told me his backstory of growing up in Ukraine, I believe it was. I can't remember because this was a couple years ago, but he said he wanted to create a reverse Robin Hood. He wanted to take money from rich people and essentially divvy that out as yield to the poor. And he wanted to help people in that way, and he felt a calling to help. Like, do you think that in reality those were just essentially PR phrases, and they knew what they were doing, and that it would hurt people?
Yeah, so some people are well-intentioned or think they have good intentions and are just mistaken. And that's a small subset of these types. Kwon was actually a malicious criminal, and Alex Mashinsky was a malicious criminal. So his backstory is basically all falsified. I even hopped on a call with him and Daniel Leon. This is Shlomo Daniel Leon, that's also, you know, one of the executives that have pulled hundreds of millions of dollars out of Celsius over the last few years, just to line their own pockets. And I hopped on a call with them in like 2017, and, you know, Alex explained to me exactly that this was just a way to gather retail deposits and lend it out to traders, and that's where the yield came from. So I ran away from that, you know, way back then, and would never talk to him again, and, you know, didn't even pay attention at all to Celsius until they, you know, basically until I saw that thing about them having tons of these user funds in Luna.
Wow.
You know, I just wasn't paying attention. I was vaguely aware in 2021 because I saw the news of their huge fundraising with Westcap and the pension fund. And then I saw, you know, a month later their CFO got arrested and pulled out of the office. And so those are the only two pieces of news that I had tracked on Celsius since like 2017, 2018, until I saw that they had narrowly escaped the Luna Ponzi.
Wow.
And
then it seemed it was one after the next, after the next, after the next.
Exactly. Because, well, they just were sequential, because, you know, that was such a part of the Luna story, was them, you know, basically having so much of this, what should have been not risky money that they were holding for customers, completely at risk in a Ponzi. And then Mashinsky started going out and he did an AMA where he basically said that, you know, 30% of all Bitcoins have been lost because Bitcoiners push for self-custody, which is like an advertisement that writes itself. And that was when I was like, oh my God, this guy's like actively trying to get people to send him money. That can only mean that he has a huge hole. Turns out they actually blew up in spring of 2021 when the GBTC premium flipped.
Right, the arbitrage trade, right?
Exactly. So that's basically when they first blew a hole in their balance sheet, and essentially Westcap came in and saved them, is what I'm told. And that just rolled straight into FTX, because then FTX was supposedly coming in and trying to rescue these CeFi lenders that were blowing up. And that makes no sense. Whenever anybody comes in with this like altruism plan of, you know, wanting to save the industry, and you're seeing JP Morgan to crypto, like at minimum, I was like, this guy is clearly lying whenever he talks, which was what was obvious whenever you saw Kwon talk. It was clear he was lying. When Mashinsky talks, it's obvious this dude's a liar. When Sam Bankman-Fried was talking in June, July, it was obvious he was a liar.
Yeah.
And so I at least wanted to be on record pointing out that this is a lie. And so I started tweeting and doing media appearances and saying, like, it's very clear that this guy has a self-serving reason for making bids on these CeFi lenders. Right. We may not know what it is, but it ain't for charity. And don't listen to him. And that's when I started the "Don't Trust Sam Bankman-Fried" tagline that was on like 100 tweets through the summer. And then I think I started calling him Scam Bankman-Fraud in September or October, which ended up getting picked up by the media, which was pretty cool.
Yeah.
Like, Scam Bankster-Fraud. Scam Bankster-Fraud, yeah.
Yeah.
And so, you know, sort of being confident that I knew this guy was full of shit, I think was why CoinDesk got in touch when somebody passed Ian Allison, one of their editors, the Alameda balance sheet on November 1st, a few months ago. And because I'd been on CoinDesk TV a few times and had helped him with a bunch of stories over the course of the year, he passed it to me, and I took him through it and told him what was in it. You know, we talked for about 45 minutes or an hour about this balance sheet, which became the story that came out the next day. And I have the big block quote, but like the whole article is basically the stuff that I told him that I saw in it. And that was a very, very quick unravel from there, you know, and I was pretty guarded about what I said. I mean, I really just said, like, what this really boils down to is like over 2/3 of the net equity in this company is this printed out of thin air token that has a fair value of 0.
Right.
That should worry you.
It's counterfeit money.
Yeah.
You know, I listened to a podcast recently. It was Grant Williams' show, and they were talking about how someone was on, I believe his name is James Block, and he had been investigating this long before the collapses, and also going to the Bloomberg cryptos, or someone that he mentioned was going to Bloomberg crypto saying, hey, why don't you interview Sam Bankman-Fried and ask these questions? Because they were already starting to pull the thread. And apparently Bloomberg Crypto said, why don't, you know, you ask him? And he goes back and says, well, you guys are Bloomberg, you know, he'll answer you. And they say, well, if we ask him this, he won't talk to us anymore, right? It was about losing access instead of really answering the questions. And so when Bitcoin was really running up to, you know, that 69 level, did you see that as sort of a bubble that was going to deflate because of all the cross collateralization and the easy money that was going into the whole system at large? Or did you think that it was going to keep going? Because I personally think that a lot of these companies and leaders of these other crypto exchanges, they thought that they were going to get away with it because Bitcoin was going to keep going, and they probably would have for longer than what ended up happening.
Yeah, I think that's very plausible that more of them would have escaped. And, you know, and basically they would have piled on more risk and blown a bigger hole in the balance sheet, but would have kicked the can down the road potentially and ended up committing larger frauds in the future. Yeah, it's possible. The echo bubble or the echo boom, the second half of 2021 was weird, but it was hard to see that in retrospect. It was weird because it wasn't driven by retail volume. There wasn't really retail participation. The retail interest basically drove the the peak in April, May of 2021. And after that, it was basically all institutional, which means that it was basically leverage. It was just borrowed money. And there are theories out there, and evidently some pretty good evidence that there was probably some kind of shenanigans actually with Alameda spoofing orders on Bitcoin in particular on Coinbase to try to drive the price up because they had such huge Solana bags, and they knew that they couldn't make Solana pump, which would pump more than Bitcoin. So you could spend some money supporting and pumping the Bitcoin price and make way more money by dumping Solana if it went up a lot. So that's something that I haven't seen somebody like drive completely to ground. And again, there's no one so the mainstream media doesn't have the expertise to do it. And everybody has to turn out a story like this afternoon based on something they find out today. So nobody can really investigate for 3 weeks that it would take to get the story. And the crypto press has no incentive at all to do it. So you're basically only left with Twitter anons.
Well, especially when you have CoinDesk owned by DCG, where there are questions right now surrounding its liquidity and whether something's going to happen with Genesis and ultimately Grayscale. And then also with the block that actually was being paid off by SBF, one of their executives. So what's next? I mean, you talk a lot about Binance right now. I think CZ blocked you, right? Or unfollowed you.
CZ finally blocked me.
So many questions. He's kind of, I think he was living in Canada, maybe. I'm not sure where he's based, to be honest. There's an offshore as well as a US. There are market makers that prompt questions of whether they're trading against customers. They have a native token, BNB. I think if you're gonna list a token, you have to buy a bunch of BNB, is my understanding. I mean, this whole space is so opaque. What do you want to share about Binance or any of the exchanges that are out there that haven't,
Yeah, well, I mean, so there are at least 3 or 4 different ways that Binance falls, which I think it inevitably will.
You think it will?
In the end, it's because everything that they trade other than Bitcoin is worthless. So in the long run, crypto exchanges are kind of like dead in that respect. And then another way that it could fall apart is because I think the price of BNB and it's just completely manipulated and just BS, basically, because they have so many of these little, like weird ways to try to pump up the price, and there's just like literally no trading volume between that air token at $25 and $200. Like they just marched it up during the bull market, and there's no price memory whatsoever with that giant void below like $200. So if there's any kind of hiccup that drops below that, it's just like look out below. And then the whole regulatory thing. So they've been doing a ton, obviously, over the years to just kind of obfuscate what they do and how. And I understand, like that's a business strategy to stay outside the reach of regulation. They're supposed to, not have a headquarters. But what they've done specifically with Binance US, it appears, is it looks like it's basically just kind of like a front and a skin on Binance.com, which is not what they told regulators that they were doing. CZ actually owns the 2 big market makers that operate on Binance US. They're constantly shuttling billions of dollars and hundreds of millions of dollars between wallets associated with the international Binance.com and Binance US. What's probably happening is that somebody's entering an order, and I don't really dig into exchanges enough to know this for sure, so this is my hypothesis, that you're entering an order on Binance US. It's actually not matched by any sort of other order with a customer on Binance US. One of these market makers that CZ controls that's on the exchange is actually matching that order and then filling it on Binance International. And that is, from my understanding, not something that they're supposed to be doing with this US entity.
Wow. So do you think a couple months from now we're going to have had another blow up that potentially obviously puts pressure on Bitcoin's price, or do you think that somehow these companies can muddle through and we've hit the end of the dominoes?
Well, I mean, I think at this point the only one that's left, we saw Wyre, WYRE, went under today, which had an acquisition offer last year for $1.5 billion, and it just went under today. So there are still some of these kind of crypto infrastructure type players that are facing troubles or trying to raise money and things like that. As far as, I mean, I think Coinbase and Kraken are fine. I don't see any reason why. Like they don't have company script BS value tokens like FTX did with FTT and like Binance does with BNB. They don't have pretend blockchains like Binance Smart Chain, which is, obviously centrally controlled and just kind of used for pump and dumps. And if regulators ever take a look at it, like it's just game over. So I think they're probably fine as long as like people are still trading these and those things have values above zero, they can keep on playing the casino game and they'll be fine. I think the real question is, is there something wrong at Binance or not? Or do regulators go after them really hard? Basically, I think that's kind of the one outstanding question.
Well, yeah, there's probes and there's a potential that customer funds could get locked up for years and you can't have access to them.
That's one of the worries. And that's why we always say, like, don't trust anybody. That's why we try to encourage everybody to take their coins off of Swan. Like, that's the whole point, is self-sovereignty and self-custody. And it's really not as hard as the Mashinskys and the CZs of the world would want to make you think, because it's in their interest to keep your coins on platform, keep you trading it, or let them gamble it.
Well, I want to touch on that point for a moment, because I feel that there's a debate going on right now in the community of whether people should self-custody or not. So for a lot of people, I think, especially maybe if you're older, my mom and dad, I don't think that they feel comfortable self-custodying, even though I've proudly orange pilled them. What do you say to people who wonder which one is the right choice? Because there are a lot of risks when you do take self-custody. You have to be very, very careful, and personal responsibility, number one, in this game. So what do you have to say about that? Yeah,
I think there's, so there's third-party risk and there's risk of losing your keys if you're self-custodying, and you've got to balance those for yourself. So, so my parents use third-party custodians, and that's okay. That's what they're comfortable with, and I totally understand that. And but I want to keep whittling away at that and abstracting away the complication and using maybe like trusted third-party recovery. So you may have like 2 keys, or you have 1 key, and then a trust company has a second key, and then a company like a Swan or an Unchained has the 3rd key and can help you sign transactions and things like that. So I think that's that's one of the reasons that we bought Spectre, is to create those solutions and kind of abstract away the complexity, and then allay the fear, and to really make sure that for most people there's no chance of loss or a dramatically reduced chance of loss. And I think that's a lot better than giving CZ your coins.
What can you share about Prime Trust? So if you have your coins on Swan, they're ultimately held by Prime Trust. What do people need to know?
Well, they're ultimately held by Fireblocks, which is a massive custodian in the crypto space that stores billions of dollars worth of Bitcoin, but also altcoins, but an $8 billion valuation and probably 1,000 plus employees, things like that. What's great about a US trust company structure is they can't rehypothecate your coins. You own them outright legally. If there's a bankruptcy at Swan or at Prime Trust, they're still your coins because you actually own it in an individual trust account. So everyone who signs up for Swan and actually creates an account with Swan, you actually own your own trust account with Prime Trust. So you legally own whatever's in that, which is very different from the terms that you sign when you gamble with a crypto exchange.
Okay.
Because they own your coins and they actually have an IOU. So this was something that changed in the accounting rules. I think Coinbase was told last year that they had to start calling these deposits of users on the exchange a liability, that they had to hold it as an asset and a liability, but it's their coins, right? I think they actually do have a trust company for some of their custody products, so it's very similar to Prime Trust, but I think that's like Coinbase Vault or something like that.
Well, as we start to wrap up, I want to get your take on what's happening with SBF, because that $250 million bail was, I think, historic. Pleaded not guilty. And now I believe that he's pretty much off the hook for 9 months until his next court appearance. So what's your take on what's maybe going to happen? What do you think he'll do for the next 9 months?
Oh my God, I just don't care about the last question at all. But yeah, I mean, I think he's going to go to jail for decades. And I think I think that there's more than enough evidence and more than enough of his associates that did his bidding that have turned on him and are going to testify against him, and I think he'll mount an expensive defense. But I think in the end that he will serve a lot of time. Yeah,
I think he'll take some sort of plea deal, but it'll take a while, and it'll be interesting to see. I'm sure he'll play a lot of video games in the meantime. What do you think the space will look like in, say, 5-10 years?
I mean, I honestly mostly just think about Bitcoin. So I think that you'll see the continued sort of advancement. TikTok, next block, Bitcoin just continues to do its thing. as we say, Bitcoin works. And that's just what it does. It works as it always has. It's been working for 14 years and it'll keep on churning out blocks every 10 minutes or so. And I think what we'll see is, you know, there will be at some time in the next 5-6 years, whatever, like some kind of large price move, as there always is. And I think this next cohort of people that feel Bitcoin wealthy or have a large percentage of their net worth, I think that cohort is going to be large enough that you start to see them demanding medium of exchange services in the West. And I think that will be the real sort of crossing the chasm aha moment for people globally and institutions and everybody, is to see, oh wow, that was a lot more than the hobbyists playing with Lightning because they were interested in it, or the very small numbers of people that, you know, got in 2012, 13, 14 in size and now have most of their net worth in Bitcoin and therefore require those services. I think this is what I've always kind of talked about. Like, we're still so early in the adoption of Bitcoin as a store of value to expect us to be a widely used medium of exchange this early is really unrealistic.
I think it's such an important point, because I've talked about this as well, this idea of, you know, in developing nations, it's used as a medium of exchange now, and people are starting to save maybe for the first time ever. We're privileged here, and we've always sort of had this idea of saving or a 60-40 portfolio. And so we use it more as a store of value, and I think those will ultimately cross. And people will be using it more as a store of value for the first time in developing nations, whereas we'll be using it more as a medium of exchange. Do you feel like Bitcoin will be understood by sort of the mainstream media soon, so that they can actually, I don't know, break through some of this fog of the crypto space so that people understand the difference finally?
I would say that, I mean, you and I and a few others, we've been watching this, you know, over the last few years. And so it feels glacial, but at least 10 times more mainstream anchors and reporters understand Bitcoin pretty well now than they did in 2017. Maybe 50 times more, right? So it has been breaking through. This massive number of books, massive number of Bitcoin shows, increase in the number of people that are actually delivering a Bitcoin message, not an altcoin crypto message, that are going and doing appearances. So I think we are getting through. And we're converting a lot of these people too. Like, I'm pretty sure Christine at CoinDesk TV is like a closet maximalist at this point. We just saw there's a guy named Paul Barron that has like a huge YouTube show and channel, and then he's basically turning his whole platform into Bitcoin for this year. He kind of announced that on Twitter this week. Blamed it on me, so he's catching a lot of arrows from the .eth haters. But you know, I think that you can actually use these opportunities to evangelize. And you know, I know you do a lot of talking to reporters and anchors and stuff. I do too. And I probably talk to twice as many off air as I do on air, just answering their questions and feeding them ideas and stories and sending them articles and books, and just kind of, you know, it's a big part of what I've done for the, you know, basically since March, about 10 months now, to spending, you know, 20-25% of my time engaging with media and educating them on Bitcoin, because you just get so much more leverage educating people who are then going to turn around and do the educating.
Right. I wanted to ask you before we wrap up about the home equity side right now that you're going to offer for Swan, because I've heard interviews with people where they talk about this ideal world where we're taking out loans against our Bitcoin, but essentially, you know, it's going up in value. So it's totally backwards from the credit fiat system that we know. What is the home equity option with Swan? How does that work, and how much risk really is there, because it's so volatile? At least at this point.
So right off the bat, this is for Swan Private Client Services only. So this isn't like a YOLO, hey, sign up and 2 minutes later you're, you know, doing something dumb without an advisor. So this is basically for people that, you know, have pretty large investment portfolios already and feel like they want to take some of the money that they have tied up in their home and diversify that into Bitcoin. So, you know, I think there's a place for that. We've obviously seen the growth of asset-backed lending platforms using Bitcoin as essentially a way to take out loans. And you know, the fact is, most people historically on these platforms are using that to buy more Bitcoin. So it is kind of like a bit of leverage there anyway. So I think responsibly done and being completely upfront with the risks and completely transparent with the fees and the mechanisms and making it really simple is kind of the key to this, because people are going to do it no matter what you say. If you don't do it this way, they're going to take out a HELOC and they're going to YOLO Bitcoin long.
Yeah.
So I mean, the product is great. There's a lot of demand, a lot of response for it. There are a lot of people that just, that prefer the way this is done because you don't actually have a monthly payment. There's a simple interest rate. I think it's 7.5% that accrues. Term is 6 years. So it's like more than a Bitcoin cycle. Presumably at some point in 6 years, you'll see a price rise. Huh. And then on the lender's side, they like it because the loan is securitized by both the Bitcoin and also by the home.
Got it.
Right. So it's pretty easy set of docs to just do, like, sign once and you kind of get the money out of your house and into Bitcoin all at once.
It's so interesting that real estate for so many young people feels out of reach, and Bitcoin has presented this idea of digital property that you can own forever that isn't going to necessarily, be inflated away, taxed away by whatever jurisdiction you live. And where I want to end things, Cory, is just this idea of the Bitcoin standard in the future. Is it a zero-sum game? Like, is this a Bitcoin world where everyone's transacting in sats and these other currencies go away? Or is it an asset class like gold? I mean, and how do we get to either place? Because this is one of the conversations I love having just off camera with people, this idea of game theory and, the BRIC system and global US, the dollar dominance sort of waning, and how Bitcoin's going to come out, because certainly the powers will be against it once they learn the power that, it takes away from the state. So what do you think it's going to look like?
Yeah, so I mean, that's the good thing, is that as messed up as the United States political system is, it still is made up of people, and those people can be converted into Bitcoiners. And so, we the people do run the country, even though there obviously are like oligarchical and sort of corporate interests and special interests that influence things heavily. At the end of the day, the legislators and the elected officials are human, and as such, they can become Bitcoiners, and many of them are becoming Bitcoiners. And so I do actually kind of just see that it will infiltrate and that the truth will win out, because someone objectively looking at it will selfishly choose Bitcoin for themselves and will not want to see the government move, contra Bitcoin. So that's what I think will actually happen in this country. As far as the question of like other currencies, I mean, I think eventually we'll all use Bitcoin. I think there will be a long period, decades long, maybe even into the next century, where there are still some other remaining currencies. But, I think the weak ones will kind of die off, and you'll see basically, more and more places just using dollars and Bitcoin, or dollars or Bitcoin.
I think we need to start using sats as a unit of account more. I love seeing my portfolio in sats personally, as opposed to Bitcoin.
So rich in sats now.
Yeah, we need to get that word out. I believe we really need to get sats out there. I think it would make Bitcoin actually more approachable in the sea of these other altcoins. And it's cool that Swan actually lets you toggle, but I just want us to, I want sats to be the word. Where can people find you? What do you want people to know? Anything else just about Swan?
Yeah, just follow us on Twitter and check out Natalie's show Hard Money. Subscribe to the YouTube. I'm Cory Klippsten on Twitter, pretty accessible. My DMs are open for better or worse.
Yeah. Well, and I have to ask you before we leave, what do you say to the people that call you toxic? A toxic maxi?
I mean, I usually just respond with the truth that maximalist is an epithet created by Vitalik, who runs a fraudulent project and works contra Bitcoin every day. So, I kind of reject it. It's up to other people if they want to adopt it, but I'm just a Bitcoiner.
Well, I know a lot of people are thanking you for really honestly saving their life savings. I know the messages that you've gotten, it's been such a turbulent space to navigate. Yeah. And I've been really grateful to work with a company like this, because a lot of people early on when I started the show, they were like, you need to do NFTs and this and that, and you're missing out on so much money. And I was like, you know what? I don't want to lead the sheep to the slaughterhouse. I don't know about this stuff enough. I do trust Bitcoin. I've done the homework on Bitcoin. Yeah. And I'm so glad that this company's focused on just that and saving. Because we all deserve to save for our future. So.
Absolutely, and we need to be able to have the best money ever to do that in.
Awesome.
So,
Thanks, Cory.
Thank you.